have moved from buying and selling to buying and flipping, fixing and flipping, right? And now I am entering in the genre of development. So I'm building from the ground up in another state, and I'm also putting together a investment group for the common man to be able to do it. Um, so look out for that. I'm actually putting together a form of banking where somebody who works 9 to 5, 5 days a week, can put a portion of their check toward the finance group and be a part of the development, the building, whatever deals are on the table that they would be interested in. The finance group is roughly at this point, we have about 200 applicants who are interested. Not sure how many I'm going to take yet, but the objective would be to literally build a investment group that can self-finance development from the ground up, buying land, excavating, pouring concrete, running municipality, lights, gas, water. Some areas do sewer, some areas do uh, septic tanks, and putting in roads, something as simple as roads with sidewalks and driveways. We're going to build whole communities. But today's conversation is the foundation of all of it, credit. I think most people don't understand how their credit score is computed. What makes my credit score why are some people a 450 and some people are an 800? And how do I go from 450 to 800? Credit is a risk score. Your bureau score is a risk score. Are you a high risk? Are you a low risk? The higher the score, the lower the risk. Um, so how do we go from a 400 credit score to a 700 credit score? I'm going to give you a basic formula. If you have a pen, you might want to write this down. And this formula is how your credit is evaluated by everyone, banks, uh, and the credit bureaus, how they build your score, right? So first, uh, your credit score is three parts. It's the high credit limit, right? So I have $1,000 card, right? So for examples, I'll just write so I don't forget what I said, right? I have $1,000 card. I go out and I use that card. So the high limit now has an average daily balance, right? So I went out and I used $100 of that $1,000 card, and this is February. It's only 28 days in this month. During the month, there is a minimum payment date. Let's say the minimum payment date's at the end of the month. Let's say it's the 28th of the month, I have to pay this. And I cannot be late. I has to be in on the 28th. Let's say every month was February and you never did another thing with that card. And the average daily balance meant your minimum payment on the 28th was $10, right? So you spent $100 for the next year, right? The next 10 months. You're paying $10 a month on the 28th. You're paying it on time. You've only used 10% of the card and you have $1,000 line of credit. That score would definitely be over 800. As the usage goes up, the minimum due goes up, the average daily balance goes up. The higher the minimum, the higher the average daily balance, the lower the credit score. So the same $1,000 card, you use $900 of that card. That's 90%. It's the 28th of every month. That minimum due now is probably closer to $80, right? Let's say $60, right? $60 a month is due on the 28th, and you're making those payments. Your credit score is not going to be in the 800s because of the usage of your credit. That score will probably be more like a mid-6s score. Now, you got a family emergency and you decide to use that card. So now you've overdrawn that card. That card now is $1,100, but it's $1,000 limit, and you're over your limit. You're gonna get a fee for the over the limit. You're gonna have a monthly still due, but now your score has gone down, right? Why? Because you're over and you're maxed out. Simplest way to evaluate yourself is to look at that formula, getting the payments down to, well, getting the balance down to 20% is what most financial planners will tell you. I use the number of 10%. And why? Because that 10% says to the credit bureaus that I manage my credit well, right? I don't overuse my card. I pay it on time. Um, Usually, uh, that scenario, right? You're using 10%, you're paying on time, uh, your credit score is now, let's say, over 700. Let's not use 8. Let's say over 700. Usually, with that scenario, if you do one card like that, you're going to get several other pre-approvals in the mail. Those are my favorite, right? You've been pre-approved with a Mountain High credit for up to, notice that, up to $3,500. You call Mountain High Credit and you say, hey, I got a pre-approval for you guys. They still will look at these factors before they give you a line of credit. If that letter was to get you to call and say you're interested, then they will now see how interested they are. If you're at 10%, if you're on time every month for the last 7, 8 months, you might be available for that 3,500. That sliding scale will show she uses more, he uses more of the card, their payments isn't always on time. And that then they'll probably say, oh, you know what, you can't get 3,500, but we can give you 1,500. Right? Some of the things that I usually advise from the very beginning, when you first learn this formula, right? I would say the first cards you get are not going to be the best cards you get, right? Why? Because your interest rates are going to be very high, because you're new to credit. Those who don't have credit normally can't get credit. Those who first get credit, get your little $300 card and don't go crazy, right? You get your little $300 card, you go out, you spend $50, $60, you spend $100 on dinner, and now you're making the minimum payment. Some of us say, okay, well, you know what? I'm gonna spend 100, but I'm gonna pay 100 off. It does not benefit you, right? It does show that you're a good manager, but if this is a risk score, right? So I spent $100 and I paid 90 of it, and I left $10 on this $300 card. That's a better look than I got paid. I paid everything off. Any questions so far?
Makes sense to me
Yes.
so far.
Mhm. Yes, I was also gonna say too, I know sometimes too, like with the interest, a lot of people would rather pay, more than less, because sometimes interest does add up too, that plays a part in it too, because it's like you don't want it to get to a point where it's like you have to keep paying interest, because interest, you get that every month as well.
True. I'm going to give you a little bit of a freebie. For those of you who have student loans, right? You ever notice that you pay the minimum due, but the balance doesn't move? That's because the interest is double the minimum due. If you want to lower, or if you want to begin to put a dent in the student loan, here is my formula for that. Take the interest, take the minimum due, double it. That's the payment. I know when it comes, it looks nice. Oh, it's a $48 payment on $25,000 worth of student loans. You're never going to make a dent in it. How do you make a dent? You'll see the interest is $114. You'll see it's $45 for the due. Add them together and pay it. If you can't double it, right, depending upon your income, if you can't double it, then interest plus the minimum payment equals your payment for that month. if you can make an extra payment, right? So you made that interest plus minimum, and you want to throw another $100 at it. That another $100 in that memo line, it should say, or in however you send it, it should say to principal, right? So you'll make two payments a month, the interest and the minimum, and then your overage payment. This payment is to knock down whatever the balance is. You will then begin to see those student loans move. If you're just paying the minimum due, you'll never, because the minimum due don't even cover the interest at most times. It'll be like $115 interest, a $37 minimum due. You're like, oh, I did great. I paid the minimum due, but the interest was double, and every month that interest is going to keep accumulating, right? So you paid $137. The next month is another $137. The next month, but you're still paying $40 a month. It'll never work. It'll never work. You don't want to put yourself in a position where you're making the payment like that. That's how you would do. That's how you would pay down a student loan. But to go back to regular credit cards, yes, I would always advise, if you're the type of person who wants to see that, that's how the bank or the credit company makes their money, right? It's the interest. So if you're paying the interest plus the minimum due, you're doing a good job. 9 out of 10, they're going to apply a portion of that to principal. So you're going to have to put on that payment for interest or toward interest, right? Toward premium or for premium. Because if you don't, they're going to allocate it where they'd like to allocate it. But that formula, let me give you that formula again, because I think that formula is very important, right? Because most of us, we call in Lexington Law, we call in all these, credit fixers. This is what they're doing, right? Here's the formula they use. Here's the formula you should use. You could fix your own credit tomorrow. Go on Experian, sign up for the $26 a month, all 3 bureaus, and for the next 6 months, use this formula, right? I know what the high of my card is. I got a $2,500 card. The balance on that card is $2,100. I got to pay that card down. The monthly payment is $52. I can't miss the first of the month, so I'm gonna start paying on the 28th. If it's due the 5th, I'm gonna start paying on the 3rd, so it is on time. Those 3 things are gonna raise your score. You can go on there tomorrow, and once you get, the other question I always get is, well, I only have one card. I don't have too many cards, right? If you are going to do any business in New York, if you're going to purchase a home, right? If you go to a mortgage company to be mortgageable, you need at least 3 lines of credit that you've had for at least 2 years. That's what a mortgage company is looking for, right? I want to buy a house. I want to buy a house in North Carolina. I don't want to live in New York, but I got to go get a mortgage. I don't care where the bank is in the continental United States. They're going to look at your score, right? Which is this formula I've just given you. And in that formula, they're going to look at these lines of credit and say, well, she had a $300 Capital One card. She hasn't shown that she can handle a $400,000 house, right? But she's got a 700 credit score. These are the portions in part that you have to begin to think of now, right? I'm going to want to buy a house in the next 2 years. Okay, great. So stay on that job for the next 2 years, because you need 2 years of employment, right? 2 years or 2 years in the same field. So if you're a school teacher and you left from charter school and went to public school, that's fine. But if you was a school teacher and you went from being a school teacher to being private armed security, unless it's been 2 years, they're going to have a conversation about that, right? So I've been this school teacher. I've been there for 2 years. And now my credit score is above 600, right? Because I followed this. Now they're going to look at the value of the credit, right? So I have a $2,500 Capital One card. I have a $1,500 Macy's card. I have a $500 Target card. You know, ladies, I went and I got me a pink card. I got me a Victoria's Secret card because that's what I wear. And I've had that card for 2 years. And that card done gone up from 700 to 1500. Those are valid lines of credit, right? I'll give you a few cheats. Walmart, Target, Best Buy. If you have a pulse and a halfway decent credit, you can get a card with them. And they're a good place to start because most of us go to Walmart anyway. Most of us go to Target anyway. If you're BJ's, just recently I realized BJ be giving out some credit, y'all. If you buy at BJ's and you have a BJ's card and you're using your BJ's card and they can track your usage, BJ's will give you a healthy credit line for a starter kit. Right. So those are
Ooh.
those are the cards that are everyday people cards, right? Of course, Capital One had an issue several years ago when they weren't really reporting properly. So you got to manage your credit report. That's why I said 6 months, right? We're building our credit. 6 months. We're gonna apply for a couple things in about 6 months worth of time. We followed that. We kept our limits very low, right? Because we want to build fast. So we kept it 10%, no more. We got 4 good cards. 3 of them are trashy. They're 29% interest, but I only use them to build my credit for right now. 6 months down the road, you're gonna get your first acceptance in the real credit world. What does that mean, Rock? It means you're gonna get a Discover card, right? Discover is gonna send you a pre-approval. You want to take that. 6, 8 months, a year down the road, after dealing with the worst of the worst, now you can begin to build with reputables, right? So you got a Discover card. You travel, so you got you a JetBlue card that you can get you some points, right? You get your Delta card, you get some points. You've been over 700, you've been over 600 for a couple of months. Once they look at you, the airlines, the hotels, get your little Marriott card. Now you got points, and you can stay, right? You got free nights and weekends. You're going to begin to build in a way that's not just credit, because a lot of these Fortune 500 companies are connecting their credit to hospitality and to rewards and to 2% cash back. Just recently, once again, and this ain't a BJ's commercial, but just recently, once again, BJ's has this huge gas station out on Long Island, and they're doing it with most of their BJ's now, but they're adding gas stations and charging stations out front. BJ's gas is literally $1 cheaper than any place else. I can fill my car for literally $30 less than if I went to any other gas station. And thus, I will drive to the light, come on, just to go to BJ's and fill up. So look at the cross market, right? I go to BJ's for food, right? Now I'm in BJ's, I got a credit card from BJ's. So if I'm going to Polo, I'm buying from BJ, right? Right. They probably are. I don't know. I'm gonna go look because I didn't even know anything. So I'm not big on the whole grocery shop thing, right? But it's somebody. Matter of fact, I'm gonna tell y'all the honest truth, so y'all can laugh at me. I'm a Mason, which I'm sure most of you saw today on my shirt, and BJ's offered the Masons a 15% discount. So in our Mason chat groups, there were all these, yo, you got to get to BJ's, yo, you got to do a BJ's, yo, you got to. So I never heard nothing about BJ's for real. I've never been a shopper in the wholesale world of food. I could run to the bodega and get me some orange juice, right? But I got me a BJ's card, and then I was introduced to what BJ's does. That's how I got here with the whole BJ's conversation. So I know some of y'all saying Costco's and Sam's Club do tires, and okay, I'm learning. I'm brand new to that. I'm old with credit, but I'm new to this wholesalers game, right?
Excuse me, Mr.
So,
RK, one
uh-huh.
second. We have a lot of people that just joined in. Could
Okay,
you recap at some point the formula that you were sharing earlier?
absolutely. We
Thank
can
you.
always start over from the formula. The formula needs to be said as many times as we have to say it tonight, right? So here's a formula, right? Most of you are calling Lexington Law, you're calling all these places, and I have nothing against them, but you're calling them to help you fix your credit, right? And you're spending $99 a month, $150, $100 to fix your credit. What I did earlier, and I'll do again now, is I'm going to give you the formula that they use, right, to analyze and to begin to work on your credit score. What is a credit score? It is called a bureau score. There are three, well, there's more than three credit bureaus. We know of three, right? But there are probably, I think, 9 or 10 bureaus actually that banks, mortgage companies, financial institutions use to quantify you, right? Here's the formula. The limit of the card, right? So you're first writing down high limit. I got $1,000 card in my hand. I got $1,000 I can use. I'm gonna go out and I'm gonna spend $100. That's 10%, and I'm carrying that $100 for 30 days, 28 days, whatever that month is. That's called an average daily balance. So my high limit plus my average daily balance. Now here's the final factor. There's a minimum due and there's a minimum due date, right? So I'm evaluating your credit. She has $1,000 card. She's only used 10% and she's been on time. $60 is what's due. She ain't sent 45. She ain't sent 30. She sent the $60 due. It was due on the 1st and she sent it on the 28th. So this is how I see what type of risk she is. That bureau score is a risk score. Here's the formula once again. The limit of the card, the maximum, the high limit of the card, how much of the card you've used, usage, and then the average daily balance being paid on time every month, the minimum due. So it's 3 parts, which equals that BS score, that bureau score. Why is that so important to know? Because once you've mastered it, you've mastered your credit. It's just that simple. So I got this card. I got a brand new card on Monday. It came from Discover, and it's a $2,500 card. I'm going to put it in the drawer. No. I'm afraid I'm going to use it too much. Then we have an issue. It's called discipline. How much of the card can I use? I say 10%. Most financial planners will tell you 20%. I say 10% because I know life happens, right? So I use 10%, and the next week my paycheck was short, and I got to pay my cell phone bill, and I got this card looking at me. I still got 10% of the card I could use. Or did I use 50% of the card and now we're up in a 60, 65%? That's going to be reflected as your credit score, right? So if I'm spending 10%, I made my minimum due on time or even early. Within the next month, I'm going to see the score reflect. Now, let me say this to you. If you use the card and you made the payment and you did absolutely nothing else, every month your score is going to change anyway, right? Because some months are 31 days, some months are 30 days, some months are 28 days. Some of you are due in the middle of the month, so that gives you 2 more days instead of 1 more day. It's always going to be 10 points up, 10 points down. So don't give yourself, palpitations or a heart attack over the score because you lost 20 points. That's not the conversation. The conversation is, if you're up at 750 and you lose 20 points, you're 730. If you're at 600 and you lose 20 points, you're now at 580. That's the difference of a couple of points here or there, right? So what I was saying about BJ's was they sent us as Masons a coupon. If you sign up under the Mason code, you'll get 15% off of everything for the lifetime of being a BJ's person. So I walk into BJ's, I become a member, give them my little coupon, go shopping, and buy 3 dozen eggs. I don't need 3 dozen eggs, but you know what? We at BJ's, right? And 3 cases of Gatorade at 48 in each case. I got Gatorade for months in the house, right? So I'm like, hey, this is a great idea. It was only $60. I did what I had to do. So on the way out, the gentleman goes, do you drive, sir? Yeah. Well, we have a gas station across the street and it's cheaper. Our gas is cheaper. I'm like, oh, let's go see the gas station. Come on, I'm BJ'd out. And I get to BJ, I go across the street to the gas station and I fill up on gas. And it cost me $35 less to fill my car. And I'm like, I'm in love. I will forever be driving past gas stations to come to BJ's. So the next time I'm in BJ's, I still got 2 dozen eggs at home, but I might want, some peanuts by the gallon jug, right? So I'm gonna go get some peanuts by the gallon jug. And I get back to BJ's, and of course, the lady in customer service says, "You know, we have a BJ's card." A BJ's card? What do you mean? Well, once you've been a member of BJ's for a little while, or you can always apply for the card, and it'd be better for you. She was giving me the hookup. It'd be better for you if you wait about 6 months, because then you're not new and you have some buying history with us. And we're looking at buying history, we're looking at your credit, we're looking at this, we're looking at that. Okay, BJ's, I see the game you want to play. Now, Target does it, Walmart does it. I mean, if these are the stores that you shop in, why not get a card with them? And I'm not saying get a card with them to buy their stuff. I'm saying get a card with them, period, because they'll be easier to build a history of credit, right? 2 years, 3, 4 major lines, whether it be department stores, whether it be revolving credit stores. Now you're in the majors, right? So now you walk into a basketball game and there's an American Express table, right? We're going to give you a juice cup if you sign up with us. How many of us have been duped into filling out credit applications because we wanted the cup or the frisbee or the whatever they were given? But most of credit, right? The real winning credit is understanding that formula which I just shared. I'm going to share it again. High credit plus average daily balance plus minimum due and date equals bureau score. Once you know that formula, it all makes sense. You can, if you need to do something and your credit 680, how do I get it up over 700? I got to lower my average daily. I owe 200. I got to put 100 on it. I need to make this minimum payment. I need to, like you said, pay off the interest. You now know what you need to know to do what you need to do and to manage. I think a lot of times we don't manage, and to manage the credit, right? You now know what you need to do to manage. So now when you sit with your credit report, you can say, oh, you know what? I need to pay this card down some. I don't need to pay that card all the way down. I need to make the minimum on that card, but I need to throw another $100 over on this card because I need to get my score up. And when you go on Experian, there's a whole bunch of modules. When you pay that $29, there is a module for manipulating your score. If I pay this down, this is what my score is going to be. If I pay these 2 down, this is what my score is going to be. You can literally go on Experian and decide what score you want. I'm at 602. I want to be at 702. How do I do that? Experian will walk you through it. You don't need anybody else to walk you through it. You can go right in the app, go to the modular, figure out on the modular what you need to pay down and when you need to pay it to make it what you need it to be. I have worked with hundreds of people when it comes to their credit, and I think that's where the whole learning of credit came from, because I've had people walk in the office and say, I'm ready to buy a house. Your credit don't say you're ready. How do we get your credit to say you're ready? We need to get you now. FHA, you could be 580. So imagine you walked into my office and you can't buy a house because your credit score is lower than 580. What have you been doing? You just didn't know the formula, right? So we listen and we don't judge. You just don't know the formula. Once you know the formula, now you can manage your credit to a place where you can do anything you want to do with your credit. Anything you want to do. You want to open a business, you want to get business lines of credit, you want to, everything else, right, is that formula. Any questions? Because I think I've talked my time.
Thank you so much for what you shared. Does anyone have any questions?
Yeah, I did have a question. I don't know if you can hear me.
Hey, just fine.
Yes. So I kind of came in a little bit later. But
Okay.
you said you have a business. What office do you work? Like what kind of work do you do?
So I'm a licensed real estate broker. I help people prepare for purchasing as much as I do buy, sell, flip, and develop, one-stop shop real estate wise. But as long as you're doing real estate, you're bumping into a whole bunch of other industries. Credit is something that I had to master to be able to help our people, and simplify. So that's where that formula comes from. Just simplifying the formula of how to get your credit where it needs to be.
Gotcha. Thank you.
You're welcome.
Any other questions? All right.
So here's what I'm gonna
I
do,
have a
right? We have
question.
Okay, we have another
okay,
question.
okay.
How does it affect your credit when you close a credit card that you had for a long time? Because they keep charging you like a annual fee.
So
Mm.
annual fees are a part of the game. That's how they make their money,
Yeah,
right?
but I want to make my
So
money too.
so here's how you make your money. Go use the card.
I do, but I just don't feel like the the cash back is beneficial to me compared to other cards that I've dealt with.
Well, I mean, again, it's an industry, right? So there are other guys out there. If you're uncomfortable with them, I would say they make this little thing called a transfer check. Beautiful game to play. Very wealthy people, they will get the transfer check. They got American Express, and then they got Discover. And Discover is offering 6 months interest free if you transfer using their transfer check. Now, here's the issue with the transfer check: it is not seen as a purchase, it is seen as a cash advance, right? So you're going to get however long they say free, and then it will begin to accrue
Interest
as
rate.
though you took cash, right,
Mm-hmm.
on it. So if you're going to play one to the next and one to the next, so it's the low interest rates, that's fine. But if you plan to move it one time and just sit on it, soon it's going to be not worth moving it because the interest rate's going to accrue so fast, right? So I would say to you, um, I would definitely look into transferring to a card that I feel that the points and that the benefits are there. I agree with that. Um, but again, I caution you, right? Because you have history with these people. And if you the thing about credit, let me say it this way. If you're not using your credit to do something, most of it just have credit to have credit, right? But I really believe that you should mind your business while you build your business, right? So you should have a passion, you should have a pursuit of something else that you're going to need your credit to build that business, right? So we're not just using it to buy shoes and buy clothes. We are the biggest consumers on the planet, right? But we are not the biggest beneficiaries of any of the markets, right? We buy more sneakers and own no sneaker stock. So my answer to your question is very simple. I am with you 150%. If you are unhappy, find someplace you can be happy. Use the transfer check at 0%, and then ask them what the interest rate will become after. And if necessary, pay it down while you go. So that way you've moved this balance, right? But then you've defeated them by taking away this average daily interest.
So you're saying transfer check. So basically, I will go to another company and see if I can transfer that credit history to there and then use it as
You won't
not as
transfer the history, you'll transfer the balance. And that's
I
why I
don't have a
said,
balance. My question, my problem with this card is that it would charge me at least $10 a month to maintain the card, to have the card. And even when I do use the card, I barely get any like cash back on it. And the
well,
cash
if
back
you
they
don't have
give
a
is in
balance,
cents.
so
So
what
it's
I would
not the
say to you,
balance.
what I would say to you is find another card before you close this card out. Find another card, apply for the other card, get the other card, then close this card out,
How
right?
much
That would be the
effect
way to
does
go.
how much effect would that have on my credit? That's basically my
So,
question. How
so
much effect would
depending
it have on my credit?
depending on the interest rate given, depending on the level of credit, like what's the limit? Like if you're going from a $10,000 card to a $3,000 card, it's definitely gonna lower your score. That's a definite. How much available credit will you have is what's going to deal with the score.
So it's not just closing the card that's gonna lower my score. It's just so
No,
if I have
ma'am.
a $10,000 card and I
Hmm.
close like a card that is only 1,500, it's not gonna affect my score that much, although I have this card a
No,
very long time.
no, no. But what you won't have is the history. So if you're looking to go buy a house, they're going to say, well, you got this $10,000 car, but you only had it for 5 months. that $1,500 card you've had for 10 years is actually more valuable than that $10,000 card. But if you're not planning to do nothing over the next 2 years and you got that $10,000 card, you plan to keep that card open, the $1,500 card is not going to move much. It's not.
Okay. Thank you.
You're welcome.
I have a question.
Sure.
Do you recommend, like, if you have a balance on your car, like paying the whole thing and
No,
don't pay the whole thing?
no. So my recommendation is pay it down to 10%.
Keep a balance there?
Always keep a balance, because your credit score is based on that balance, right? Your average daily balance is a large part of what your score is. You keep all of your average daily balances at 10% or below, right? So you got $1,000 card, you owe $100, make the $20 payment. You got an $80 balance on it. You want to carry a balance to continue to have an amazing score.
But you're paying the fees, right? The interest fees, though.
Absolutely. That's how they make their money. Interest is a part of credit. It's not going to disappear. There's no way not to pay them to have their card, right? So what I tell people all the time is I would rather you use your credit card than use your debit card.
Yeah, I started doing that instead of my debit. I started using my
Yeah, do everything on the credit cards. Pay the average daily balances, pay it lower, pay it down, pay the interest, right? And leave your money in the bank where it's at. That's how wealth is built. Mhm. Any other questions?
Yeah, so if you have like that average score, you said leave about 10%.
Mhm.
How does that necessarily like work? Like, are you saying that because you have some money, a balance left over, then they're seeing you as more favorable in some way?
Well, what is a credit score? A credit score is a risk score. It shows how you manage the credit given you, right? You got to have some risk. You got to manage something. If you're managing nothing, then you don't have a score.
Mm-hmm.
It'll actually, one of the biggest mistakes I made in my life is I got some inheritance money years ago and I paid everything off. I was like, oh yeah, I'm going to do great. I'm going to pay it. And I couldn't get credit for the life of me because everything was at zero. There was no risk, right? A 700 credit score says I manage the credit given me. That's all it says, right? So you have to have something to manage.
Okay, but in my scenario, like I pay everything off, but my credit score is still pretty high. Like there's been periods of where I couldn't pay things off and I've had larger balances, but I typically stay within my budget. And I try my absolute like most to pay it off once it's due, like everything, because I don't.
Mhm. Well, I mean, and again, depending on who your creditors are, right? Some of the creditors don't mind that. Some creditors don't see that as favorable. If you have an American Express and you pay it off in full every month, sooner or later they're going to close your American Express
Oh wow.
because you don't need them. You don't. So the game is played by keeping at least a 10% balance or less, right? But keeping some form of balance on the cards. If you think your score is good now, try what I said for 2 months and tell me how, and take my information and tell me how you look this summer, right? Instead of paying everything to zero, pay it down to 10%. Use it again, then pay it down to 10%.
How many cards you recommend to have? How many credit cards? Like how many?
Four, at least four. If you want to get a mortgage down the road, right? A bank, if you walk into Chase and say, hey, I want to get a house and I want you to mortgage me. Easiest way to be mortgageable, 3 to 4 lines of credit, reputable, not a $300 Capital One card, right? But a $5,000 Discover, a $3,000 Walmart card, right? Those cards are looked at as reputable credit that you have managed. So 2 years, 4 lines of reputable credit. Been on a job for 2 years, you make a certain income, you are mortgageable. It's just that simple. Any other questions? Okay.
All
So
right.
would you, in the chat, can you please put my email address up? And anybody who needs any help whatsoever can email me or call me. You can put my information in the chat.
I guess I do have one more question. So I mean,
Sure.
the topic of today was estate planning. Was the only thing discussed credit so far?
I'm gonna cover the estate planning part.
Right.
Gotcha.
Right. Well, look, I found it. I'm gonna put my information in
Okay,
the
thank
chat for
you.
you guys,
Thank you.
and I'm gonna hang around for a little bit longer. And if you have any questions, feel free to reach out. Anybody who's looking to purchase and want to begin the process of making yourself mortgageable, right? Just reach out and I will help you. Okay.
Thank you.
Thank you guys for having me.
Appreciate you.
All right.
All right, everyone. So we're going to continue. I'm actually going to do a quick recap and then we're going to discuss a little bit about the estate planning piece. So you guys know I am the director of the East Flatbush Community Partnership, but part-time I do teach financial literacy. So the original presenters we had scheduled for today, they've been with us for the series since it began. Unfortunately, they were unable to attend today. So graciously, Mr. RK, he was with us at the community baby shower, and Cindy reached out to him and he said yes. So we're grateful that he was here to speak on the credit component. And Yesenia said thank you. Sage said thank you. So I'm going to take some time to go through just a general recap of things you need to consider to aim towards financial independence, as well as I'm going to touch on estate planning. Okay. So for me, if you have any questions, feel free. You can, ask your questions. The only thing I will say is that unfortunately, because I am the director of the East Flatbush Community Partnership, it would be a conflict of interest. I just want to say it. I cannot help you with any of the things we're going to say as far as implementing them, but I can point you in the right direction. Okay. Normally, I would say, yeah, you can reach out to me, you can schedule an appointment, but we can't do that today. So today is just educational purposes only. All right. You guys ready? Let me know if y'all ready. Somebody say something because y'all quiet.
We ready. We
All
ready.
right, let's go.
Still
Hey, great, great, great. I like energy, so I appreciate that. All right, here we go. Can you guys see my screen?
Yes.
All right, great. So we're going to recap a couple things today. We're going to go over 7 money milestones. Edlin, I'm not going to be able to look at the chat. So if you can, let me know if people have questions, I'd appreciate that. And can you guys see the right side of my screen or is it blocked out?
I can see everything.
I can see
Seven
everything.
clear.
7 money
Yeah.
milestones, the whole screen.
Wonderful. Okay, great. So we're going to talk about education, proper protection, emergency fund, debt management, cash flow, building wealth, and protecting wealth. So I'm glad you guys have been on for the most part for each session we've had. We started off in the library doing it hybrid, and then we transitioned into doing it strictly virtually. But the main goal is that you are fully aware of the fact that you need to be connected with the right financial educators, right? The people who can actually assist you. So this is how I like to describe it. You see how Mr. RK, he's a real estate agent, right? He speaks about credit. That's his specialty. If you want information about your taxes, you got to go to a tax professional. If you want information about life insurance, you got to go to a life insurance agent. If you want to start investing in stocks, you got to go to someone who has their securities license. So you got to go to the right people for the right information that you need. Sometimes we shoot ourselves in the foot because we go talk to our neighbor around the corner when they don't have no licenses, but we take financial advice from them, right? So you want to be mindful of who you're getting advice from, make sure they're professional, and ask them how long they've been in the field for. What kind of clients have they helped? Okay. All right. So the next one is proper protection. So this is a review because I know you guys have talked about life insurance. I'm going to just kind of breeze over it, but you want to make sure that you have the right amount of life insurance as well as the right type of life insurance. Those 2 things are really important. So this is a quick formula for you to kind of gauge as to how much life insurance you should have. Again, this is a review. You should have 10 times your annual income. And the reason why is because that life insurance is going to do a lot for your family. It's going to cover any debt that you might not have been able to pay while you were alive, like all those credit cards we talked about, right? The student loans and all that. The credit is going to come at your door knocking, even though you're not there. They're going to want their money. So you want to have that taken care of so your family doesn't have to pay for it. Also, you don't want them to be concerned about anything financially because you want to give them the space they need to properly grieve you. right? And to mourn you. Remember the great memories they had with you. So you want to give them that space. So the recommendation is about 10 times your annual family income. And don't worry, if you're not able to get 10 times, initially, get some and then you can always add more later. Okay? So these are the types of things, again, to consider when you think about the type of insurance you have, as well as how much, your age, your health, the debt that you have, the number of dependents you have, your income, and if you do have a business, your role in the business. Okay. I'm not sure if a lot of you guys know, but banks and a lot of companies, they have life insurance. They have life insurance on their key players. And they come up with an agreement with them where if they pass away, then the company is going to be compensated because they need some time to, that person probably was a high producer, so they want to keep their income coming in, but they also need time to find someone to replace them. So that's how companies protect themselves. They get insurance on their employees. And how much more do we need to protect our families with insurance as well? Okay. I'm going to skip this one. We're going to talk about temporary and permanent really quickly. So temporary life insurance lasts for a specific amount of time, typically 10 years, 20 years, 30 years. It has a start date and an end date. And once that end date is up, you no longer have the insurance. Okay. But this type of insurance is really good, especially for me, I purchased my home in 2010. I couldn't afford permanent insurance then. So I got temporary life insurance. I have a 2-family home. My mom lives upstairs. I live downstairs. I didn't want her to have to be concerned about what to do with the mortgage in my passing. So I got enough that if I passed and she was still alive, that the house would be paid for. So it served that purpose. You can only get more life insurance when it's temporary. Okay. And so these are some of the areas it can cover: helping you raise children, if you have a mortgage, paying for college, and different things like that. Okay, I'm going to skip this one. So this is typically what happens when we're like in our 20s, 30s, 40s, maybe even 50s. We have more responsibility, but we have less wealth. But as we get older, hopefully we have more wealth and less responsibility. So if you look down at the bottom, you'll see that there is term and permanent life insurance recommended, but eventually that temporary insurance is going to end because it only lasts for a certain amount of time. But it's okay because you have less responsibility at that time. So that's totally fine. Okay. If at any point you have any questions, feel free to stop me. One thing I want to mention about temporary life insurance also is that sometimes you can get that type of insurance that has living benefits. Like if you have a chronic illness, for example, if you have a stroke or heart attack, you can't do 2 daily functions, you can actually get some of those funds while you're still alive. So it can benefit you even while you're still here. Permanent life insurance will last your entire life. Okay. If you pay your premium every single year and every month that is due. And one great benefit of permanent life insurance is that it has something called cash value. Drop a 1 in the chat if you know what cash value is. Drop a 1 in the chat if you know what cash value is. Okay, I see some. No, I can't see the numbers because if I'm using my Mac, so if I click out, then I can't see y'all. But I saw the number increase from 3 to 4 of comments in the chat. So cash value is money that is growing. Your money, like a savings component, is growing in the permanent life insurance, and you can access it. Real estate investors, if Mr. RK is still on, he'll tell you a lot of real estate investors use life insurance. They create the system where they have their own bank so that they don't have to go out to an institution. They can do it in-house and use their life insurance to do that. Okay. So here are 3 important facts about the permanent life insurance. It covers you for life. You can add on a long-term care rider, and it has that cash value that I mentioned to you before. Long-term care is also really important because over 70% of Americans will need some form of long-term care. And that doesn't mean you're up there in age. It just means that you can't do 2 daily functions. So, God forbid you get into a car accident and maybe you can't feed yourself and you can't bathe yourself. If you have this permanent life insurance, money will come into your household that could be used to take care of you. And one particular company that I work with is Nationwide. They're not going to ask you what you spent the money on. They're going to ask for a note from your doctor saying that you can't do the 2 daily functions, and they're going to cut you a check every month for about 4 years. Okay. So it serves some benefits. I'm going to skip this one. I'm going to skip this one. I'm going to skip this one too. Emergency fund. I know you guys talked about this already, so I'm not going to dig into it too much. Recommendation is to have 3 to 6 months of either your expenses saved up or your income. You choose which one you want to save, but you want to have an emergency fund because emergencies are going to happen. We just don't know when, and we want to be prepared so that we're not relying on our credit cards and maxing them out and reducing our credit score. Everything is tied into each other. Okay. Debt management. The main thing here is you want to know what is due. When is it due? I'm a spreadsheet girl. So I got spreadsheets. I got my interest rate, when it's due, all the things. When my 0% is going to be up, all of it. I got it all mapped out so I can be, keep track of it. You don't want to have any late payments because that's going to reduce your credit score, as well as it's going to add on extra fees that are just unnecessary. Okay. All right, when it comes to increasing cash flow, this might mean you need to get a side hustle or something like that, right? Explore other opportunities. Sometimes you just need extra money in the household, and that's okay. It's okay. I'm gonna skip this. Okay, let's talk about building wealth. I'm gonna go over key components that impact your ability to build wealth. Okay. The first one is understanding that procrastination is going to hurt your ability to build wealth, general losses, inflation, and taxes. So we're going to spend some time talking about that. Okay. Here's a quick rule for you to understand the impact of inflation as well as how your money can actually grow. So it's called the rule of 72. It's really simple. You take 72 and divide it by whatever interest rate you have. Either it's the inflation rate, interest rate, or it's how your money is growing. So let's just say average inflation rate is 2.8%. Okay. So you take 72 divided by 2.8. And it's saying here that 25.7 years. Okay. I can't read it. My screen is covered. Ellen, can you read what it says on the right side? Years of what? I can't read it. It's covered up on my end and I can't move it. You're muted. Ellen,
What is it exactly?
can you read formula where it says the 72 divided by?
72 divided by average inflation rate equal years until the cost of goods doubles.
Very good. Thank you. So it's saying that 25.7 years at that time, the cost of goods that you're buying, they're going to double, right? And we already know bread is crazy expensive, eggs is crazy expensive. So we're experiencing what it feels like to be in inflation now. But it works the other way too, where let's say you have a 6% interest rate, right? That's going to tell you how long it's going to take your money to double. You divide 72 by 6. And you'll get to see how long that's going to take. So you guys tell me, what's 72 divided by 6? How many years is that? Unmute because I can't see the chat, please. What's 72 divided by 6?
Is that 12?
12.
Okay. So every 12 years, your money will be doubling. That's how you want to think about it. Okay. So now what's 72 divided by 12?
6.
So that every 6 years, your money is going to double. So depending on where you have your money, it can double faster. So that's why I always recommend, if you have an emergency fund, congratulations, but don't leave it in a bank because you're getting less than 1%. I recommend a high yield savings account because you can get like maybe 3 or 4% with those. So just keep those things in mind. Okay. All right. I'm going to skip this one because I want to get to the taxes. The impact of taxes. Okay. So you want to keep in mind how much money you're going to be having in retirement. If your job still gives you a pension, congratulations, because a lot of jobs don't. How much money you're going to be paying in taxes to the government, and how much you want to leave to your family. Okay. So there's 3 ways we get taxed. Either you get taxed now, you get taxed later, or you get taxed never. Tax now, I'm going to tell you what kind of accounts those are. That's your checking account, your savings account, your CDs, your stocks, your bonds. Those are all taxed now because at the end of every year, you're going to get a form from the company and they're going to say, this is how much money you earned, and you got to report that to the IRS because they reporting it first. You got to follow up and file your taxes and report it. Tax later, those are deferred accounts like your 401k, your 403B, your traditional IRA, and your retirement account, because you put money into it before you get taxes. So that means you're going to pay taxes on it later. Now, tax never. I like those the best because I don't like paying taxes. I don't like paying taxes. So that tax never, another way to think of it is it's called tax advantage. That's like your Roth IRA. And also you can grow tax-free money in something called the Index Universal Life Insurance Policy. Okay. So those are the different categories you can see. So on the left side of just asking you that question, do you want to pay taxes on the seed, on what you put in, or do you want to pay taxes on the harvest, on what comes out? Just things for you to consider. Okay. All right. I'm going to skip this one. And now we're going to land the plane by talking about protecting your wealth with the will and estate planning. Okay. So I don't know if you guys know, but Prince, his estate value was around $150 million. And Aretha Franklin, Evelyn, I can't see it. What does this her say is her estate value? What was it?
80 million.
Around $80 million. But unfortunately, neither one of them had an estate plan. So what that means is we already know, they were icons in the world we live in, had great wealth, but everything they had didn't go to whoever they wanted to go to because they didn't have a plan written out for it. Who knows what happened? I don't know. But so many people spend time building the wealth, but they don't invest as much time as they need to protect it and make sure it goes to the right people. So we're going to dig into this a little bit more. So there's some documents that you need to have in place. One is a will. The will is directions and instructions. The will tells you and everybody else who needs to know what you want to happen to the things that you have. Okay. Financial power of attorney is extremely important as well. In case, God forbid, you get sick, you can't make these decisions on your own. You'll have someone else who knows what you want and they'll execute for you. Having a living will, it says a healthcare directive. That's again dealing with your health things. You want to make sure you speak to someone who can help you with that. And then also the proper HIPAA release. So I want to talk about a couple things with this slide up. So I don't know if you guys know, but once your child turns, I believe it's 18 years old, if something happens to them and they go to the hospital and you call the hospital, even though you're the parent, they're not obligated to tell you anything about your child because now they're an adult. And HIPAA laws say that they can't share information about any patients without the adult's consent. So you want to have things like this in place where you can jump in and find out the information you need about your child. They're your child, right? So this is another reason why you want to just consider exploring these concepts. So I want to tell you guys a quick story about my family when it comes to the will. And then we're going to talk about the trust as well. So my grandfather, he got some land that was given to him, and he lived in South Carolina. And he had a lot of children. I want to say he probably had like 7 or 8 of them, okay, including my mom, of course. And so his children's names are on the deed, but my grandpa didn't have a will and he didn't have a trust. So when he passed, no one necessarily, like, quotes, inherited the land. Now, my uncle has been paying taxes on it, but no one else in the family really wants to do anything with the land. Okay. So one day my uncle reached out to me and he's like, Lameka, I want to give you my portion of the land because I know, you're going to do something with it. And I got excited because I'm like, okay, get some free land. This is cool. Now, come to find out, because grandpa didn't have a will and grandpa didn't have a trust, I can't do anything with the land. And my uncle actually can't even give it to me. We have to go through something called probate. Okay. So probate is a process where the courts determine who gets what. So because my grandfather had children and they had children and they had children, some of them are alive, some of them are passed, they got to go through and basically talk to everybody who's alive and see if they want to agree on what's going to happen with the land. And then after that's done, then I might be able to get what my uncle wants to give me. But if my grandpa had a will and a trust, if he would have just wrote out who he wanted to have everything, it would never have to go to court. Whatever he wanted, it would be executed. So this is what I want you to keep in mind. You can have a will and not have a trust, but you can't have a trust without a will. They go hand in hand like that, okay? So the will determines who gets what, but the trust protects it from probate. And probate is an expensive process. I'm gonna pause there. Does anyone have any questions? I'm not a probate lawyer, so I can't advise you on anything. We're just talking general education. So does anyone have any questions? I can't see the chat. So if there are questions in the chat, let me know. Okay, I see D. D, you can unmute.
Hi, Ms. Holmes. Thank you so much. Okay, I just have a question. You said that you can have a will without a trust, but you can't have a trust without a will. I mean, I happen to have both, but when I originally had it drawn up, I had a trust, and the lawyer that I had said, I don't need the will, but it would be good to have the will in the event that I forget to fund something in the trust.
Yeah.
So at least it's protected by the will. Like, let's say I buy a car or I buy another piece of property, and then I forget to fund the trust with it, then at least it's covered by the will. So technically, can't you have a trust without a will, but it's basically better to have both?
I won't say it's better to have both, honestly, because for some people, the will is enough. Like if they don't have an investment property, if they don't have children with special needs, like if they don't have a lot going on,
No,
the
I mean,
will,
in terms of the trust, if you have a trust, it's still better to have a trust with a will, but you can have one. You can just have the trust without the will.
so repeat what he told you.
So what she said to me
Oh, I'm
was,
sorry, it's a she. I apologize.
no problem. What she said to me was, okay, we're gonna draw up the trust.
Yeah.
And then she explained to me what funding the trust means.
Right.
And I said, okay. But then she also said, I would advise you to get a will. You don't need to get a will because you have the trust. And
Right.
so it's still not gonna, the property is still not gonna, because I own my own home, it's
Right.
not gonna go through probate. But in the event that you buy another piece of land or you buy another house or you buy a car and
Right.
you forget to fund the trust with it, then the will would just act as a backup. So it's not just left hanging out there.
Yeah. So I think with that, everybody's situation is different. It's unique, right? That's why I said I'm not the lawyer, I'm not the expert.
Mhm.
But what I would recommend is definitely speaking to someone in that field. I'm just sharing with you from a general education standpoint, but I
Okay.
think there's something to it by what she said. It's kind of like right now you're okay, but I do recommend this if, right? So
Mhm.
it's generally it's better to have both, in my opinion. Yeah.
Okay.
Okay.
Yes,
for
thank
that.
you.
Any other questions?
Now, when you cover the trust, are you going to talk about the various types of trusts?
Here we go.
Oh. Okay, thank you.
You know what? I'm gonna have to stop sharing for a second because I want to move. You guys are like covering my screen, so I can't see. Okay, I'm gonna share again. Give me 1 second. Oh, I am sharing again. Okay, perfect. Okay, so there's different reasons why you would want to trust. Okay, and this kind of covers the different types of trust. Okay, so some of the reasons would be to manage your property. Okay, whether it be your primary home, you have investment properties, anything around property, you want to consider having a trust for that. Protecting the interests of your children who are currently incapable of handling money due to age, immaturity, disability, illness, or substance abuse. So let me give you an example. Sometimes, on my part-time side, I'm a life insurance agent. So some of my clients will say they want their child to be the beneficiary, right? But their child is like 9 years old. So depending on the state you live in, they're not going to give a 9-year-old $500,000 if you pass away. However, if you have a trust, then you can make someone responsible for that, or you can decide to give it to them if you want to, because it's your money and you have a trust. But this is where you want to have that conversation, right? You want to make sure that you're setting things up appropriately, and that can help you. And you mentioned funding the trust. Permanent life insurance is one of those things that could go towards funding a trust as well, because it has that cash value component. It's an asset. Okay. Another reason is if you have children that have special needs and the beneficiaries, it can keep them from losing any benefits that they might be getting. Okay, so again, there's a conversation you want to have with the lawyer because they can better see your determination, your situation. It can help provide privacy. Again, a lot of real estate investors have trust because they don't want everybody to look up, the deed and find out who owns the property. So that's a reason you want to have some privacy. Okay. And trusts are not, it says, provide privacy since the trust is not filed with the probate court. Okay, so that just means this is not going into like a county record or a state record. It's just between you and whoever you set it up with, and it's going to be executed in your passing. It can help you avoid probate in multiple states. Again, if you own real estate in more than one state, and potentially it can help lower your estate taxes and provide added tax benefits for large estates. So again, depending on what you have going on, you want to just explain your situation. I just encourage you be transparent with the lawyer that you trust, and tell them what you want to do and see what's the best fit for you. Okay. All right. I think I'm stopping here. So does anyone have any general questions that could potentially answer for you all? Any general questions? Anything you want to kind of recap? Anything, let me know.
So I don't know if this is like a general question, but yeah, I mean, did you speak on towards the end you spoke on lower your estate taxes, like in what way?
I can't go into that in detail because this is just general education purposes. That's where you got to talk to your lawyer.
Yeah, that's fair.
So I will say this. So typically when you sell a property, you'll have something called capital gains. But if you have a trust, then you can kind of like finesse it a little bit. That's the best I can explain it without, getting myself in trouble because I'm not a lawyer.
Right. Yeah.
Yeah. Any other questions?
Yeah, I'm sorry I came in on this late. For some reason, I thought it started at 7 o'clock.
It's okay.
But two questions. You touched on capital gains.
Mm-hmm.
Can you explain exactly what that is? I know it's a tax, but how do we get it to work in our favor? So that when we pass, that it does, I guess these taxes don't pass on to our children or whatever. Like, how does that whole thing work?
Okay, give me 1 second. I want to show you something. I have a visual for you. Okay, give me 1 second.
Okay.
I think this will clear it up. Okay. Here we go. Okay. Okay, I'm going to share my screen. Give me 1 second. Okay.
And I do have another question after that.
No problem.
Okay.
Okay, so this is a practical example of what I was talking about with the tax implications. So let's say somebody has an account that grew $500,000. It grew by $500,000. Okay, so that's not what they put in initially. That's what it's grown. Okay, that's the growth. So if that money grew in stocks, let's just say, because it's not growing that way in the bank and it's not growing that way in a CD, more than likely it's not. So let's just say it grew that way because you had it in stocks. You're going to have to pay capital gains taxes, which is about 15%. So that's about $75,000 of the $500,000 that you're going to have to pay. Okay. Now let's compare it to tax deferred, because that one is actually 30% is deferred income taxes. Okay. So it's 30%. So now let's say that person has grown their retirement account to $500,000 and they just want to take it all out, one lump sum. That means they're going to have to pay about $150,000. So if you notice, you're paying more than the capital gains. And that's when you really need it more because you're older and you haven't been working that much. I mean, you're not working at that time. You're not getting extra income. So you want to keep as much of your money as you can. But the tax deferred one, is where, because you pay taxes on it already, you don't pay taxes on what's growing. So again, like the Roth IRA, that is one type of account where it grows tax-free. But the challenge with the Roth IRA is depending on your age, you can only put $7,000 or $8,000 in it. That's why I like to encourage people to explore the Index Universal Life Insurance policy, because that money grows tax-free as well, but there's no cap on how much you can put in per year. So does this visual help clarify around the taxes a little bit?
A little bit.
You have a follow-up question?
Okay, and so the follow-up question, when someone has their home in a trust,
Mm-hmm.
regardless of whether it's a revocable, irrevocable, does that protect the home from, with all these scams in terms of homes going on? Does that protect the home from fraud, from someone trying to take their home? Or do you need to take out title insurance, since I know you do specialize in insurance?
So life insurance is different from like title insurance. That's more of the casualty insurance.
Okay.
Like it's two different lanes.
Mm-hmm.
But what I will say is that, are you referring to like deed theft? Is that what you're talking about?
Yes.
Okay. So I'm gonna just say this again. I'm gonna try to stay in my lane, but I'm gonna say this. I personally believe that people who are pursuing deed theft, they are not going after people who have their home in a trust because they know better. They're gonna go
Okay.
after the person who has the property in their name.
Oh,
Because the
okay.
person who has their property in the trust, whoever's trying to scam them with deed death, they know they got a lawyer in their back pocket, so they're not gonna try to mess with them.
Mm-hmm.
To that. Not gonna try it. It's kind of like, oh, they know better. They got their whole property in a trust. So
Okay, and then the last question is, with the insurance, whether it's, you have your life insurance policy,
right.
when you pass away and it's left to your children,
Mhm.
does the capital gain factor into that as well, or do
Oh
they have to pay
no.
tax on
Life
that money?
insurance is tax-free money, baby.
Okay.
Tax-free.
Okay. Okay. Thank you.
You're welcome. Any other questions? Any other questions?
Well, since no one had asked a question, I guess I'm asking all the questions.
I
How
do have
often
one.
should someone review their estate planning, like their trust, their will? How
I
often?
recommend every year
Every
or
year.
after any major changes. Like for example, if you were married and then you got divorced, you want to look at that again, right?
Okay.
If you have children, you want to look at it again. If you move, right, you might consider looking at it again. Like I would say any major life change
Mm-hmm.
every year.
Okay, thank you.
You're welcome.
And I did have, I guess, a quick one. You
Sure.
said 3 ways of getting taxed. Well, what did you say for the now? I just want to, just take
So
note.
the tax now was the 15% capital gains. That's like if you have your money in a checking account,
Check.
CD, stocks and bonds, things like that. High yield savings, they get capital gains too.
Gotcha. Okay.
The second one was tax deferred. That's
Mm.
retirement accounts like your Roth IRA, your 403B, your 401k. I'm sorry, not Roth IRA, it's a traditional IRA.
Yeah, true. And then you said never, the one that
Tax
never.
never is the Roth IRA. That's an example, as well as the Index Universal Life Insurance policy.
Okay.
Mhm. Any other questions?
Will we get a copy of this recording?
It's going to be sent out via email.
Okay, great. Thanks.
You're welcome.
Thanks, Dee. That was my question I was getting ready to ask.
Yes.
Okay, good.
And I see that this was a series, so I actually signed up for the next one because I really want to hear what was going to be said about the homeowner.
Mm-hmm.
But I missed the previous two. How often do you do this? these series.
So I believe the next one is the last one, right, Cindy?
Yeah.
Yeah, the next one is the last one. This is something that we actually, okay, let me backtrack. We were partnered with Citibank and we were doing some workshops with them. I want to say it was last year. And then the two gentlemen who was coming in, they were from State Farm. So they reached out to us and asked if they can do free financial literacy classes. So I don't know when the next ones are going to be, but like the next series, but the next one will be the one you saw on the calendar.
Gotcha.
Yeah, it really just depends on, who we're connected to and what they're able to offer. Mhm.
All right.
But it sounds like you're interested, so that's good to know that this is a topic you guys like hearing about. Mhm.
Yes, definitely.
Good,
Yeah.
good. All right. Oh, Edlin, have you been putting the names in for the raffle by any chance? Okay. Okay. Cindy, did you send her the link for the raffle? Because I think we're done with questions, and then we can finish off with the raffle. Any questions? Any more questions, guys? Yeah, we're gonna do a raffle. I don't know if Cindy is still here. So you're gonna go to the website, it's called Wheel of Names, and then you just put the people's names in, and then it's like you spin the wheel. And let me know if you need help with it. I can help you.
Can I still add my name?
I don't
Or
think
how-
anyone
or
really
how is
added
it
their
done?
name yet. I'm gonna say we're just
Is it a
gonna,
link?
huh?
Is it a link that she has to send? Because I don't have it.
You can just go to the website, Wheel of Names.
Oh, Wheel of Names. Okay.
Yes, Wheel of Names. So I see some people who don't have their name like on their Zoom. So like the Galaxy A325G, if you can please put your name in the chat. And
Oh, okay.
iPhone 250, if you can put your name in the chat. And 954522, if you can please put your name in the chat. Everyone else, we see your name. So we're gonna add you in. And then we're gonna do a quick raffle. So please, if your name is not shown on Zoom, please add your name in the chat so we can get you. And then we'll do the raffle and we'll wrap it up for tonight. And you guys can still feel free to ask any questions if they come to mind while we're setting that up. Edlin, let me know if you need any help, okay?
Yes, I have to add everybody's name on it.
Hmm? What'd you say, Edlin?
Nothing. I'm adding their names.
Okay, perfect. Okay, perfect. All right. Salisha, thank you so much for putting that link in the chat. Appreciate you.
No problem, Queen. I use that for work. I'm a teacher.
All
so
right, all right, all
I
right.
know
Let's
that
go.
website. As soon as you said that, I was like,
But I
"Ooh,
can help you
that
here. Boom. Thank you. Appreciate you. All right. So Galaxy, iPhone, and okay. I see Dennis Jr. I think you just changed your name. Thank you for doing that. So Galaxy and iPhone, you guys won't be able to be entered into the raffle if we don't know your name. FYI. Okay. All right. So iPhone is
Ms. Holmes, they might not know, maybe they don't know how to change the name.
no, I didn't ask them
So,
to change it. I asked them to put their name in the chat.
because you can also change it from where
Yeah.
it is.
Yeah, I purposely didn't say that because I know some people don't know how to change it. I know how it is. And Zoom keeps changing features so often. So
Too often.
Denise's iPhone. So we have Denise. And perhaps Galaxy 832 will tell us their name if they want to participate. And as soon as Ellen is done, she's going to share her screen. We're going to pick 3 people and we're going to wrap it up for today. Okay. Thank you, everyone. And thank you for your flexibility. I'm just glad that we're always able to, do a plan F. I can't even say plan B. We got plan Fs we're executing.
Thank you.
You're welcome. We didn't want to disappoint you guys, so we tried our best to provide some value.
Is the next one going to be in person? Because
It's gonna be via Zoom. Yes.
Zoom also.
Yeah.
Okay.
Yep.
Is that how it was before the
The
previous session?
first, I want to say the first 2 were in person and it had a visual component, like hybrid.
Mhm.
But the last one was strictly Zoom. Today was Zoom, and then the last one's gonna be Zoom too. one of
Gotcha.
our presenters had a challenge happen, and so we needed to switch gears. Yeah, to
Mm.
accommodate their challenge.
I still see iPhone is iPhone 250. If you don't change it, you're gonna lose your moment.
iPhone 250 is Denise.
Yeah, Denise put her
She
name in the
put it
chat.
in the chat.
Yes.
Okay.
So it's Galaxy. Galaxy is the one we're waiting for, but we're not waiting too long. Okay. So Edeline's gonna share her screen. And do y'all have any other questions in general? It doesn't have to be about finances, just in general. Anything that you guys are in need of? Any
I guess my question, have you ever spoke about, I know I missed a few of the financial series that you had, but I was wondering about annuities. Was anything about annuities discussed?
They didn't talk about annuities, but I can talk about them. All right. So what I will share about an annuity is that it is one of those, in my opinion, like a best kept secret. So you know how right now the stock market is doing crazy things,
Mhm,
and a lot of people have their retirement attached to the stock market because it's
mhm,
a job, and they have it in mutual funds and stocks and things like that. So the beauty about particularly a fixed indexed annuity, that's the one I can speak to. I can't speak to the ones that are attached to the stock market.
mhm.
With the fixed indexed annuity, now it has to be from funds from an old job. You know how you like had a job for 10 years and either
Right.
only day or you rolled it over into your new job.
Mhm,
You have, say you had 300,000 from an old job. You can roll it over into a fixed index annuity and you will never lose any money ever. It will either stay the same or it will increase. So it really protects your money. And then when you're ready, you can turn on a feature and get guaranteed income for the rest of your life. They're very powerful tools.
Yeah,
I
because
love
I do have a fixed index annuity, but I was hearing pros and cons, so I started to doubt that whether what I did was right or wrong because
Mm,
I actually, since I don't make enough for my Social Security, I
yeah.
live off the interest that's earning.
Yes.
So I'm glad
Mhm.
that you said that because everyone has either something good to say about it or something bad to say about it.
Right. Yeah. So this is the thing. You have to be very careful. That's why we kind of led this.
Today?
Huh?
Oh, my bad.
Okay, it's okay. It's okay. That's why I led this conversation with making sure that you're speaking to a financial professional where that is what they're licensed in, you know?
Mhm,
So there's nothing wrong with you shopping around. I do it for my clients all the time. I'll look at what they have and see if I can get them something better. Unfortunately,
mhm.
I'm not able to provide that service to you because it will be a conflict of interest for me. But
Right.
what I would say is trust your instincts first of all. Like yes, you might maybe you didn't make the best decision on the product, but the fact that you're in a fixed indexed annuity, I think that is a great decision. Absolutely.
Okay.
So you can always do research. You can always move it again, right? Just make sure you're not in that surrender period, but don't because of what you hear on social media, don't second guess your decision.
Mhm,
Just build off of it. And if you need to make a change, it's okay. You're learning and you're growing. But I would say if you want to reach out to maybe someone else and ask them to compare what you have and let them
mhm.
explain like what can you offer me and how is it different from what I have? And ask questions. And you don't have to make
Okay.
any decisions. You don't have to change anything. You just want to gather information. Okay?
Great. Thank you. Yeah, mine's are out of the surrender period
Okay,
already.
good. Good.
Yeah.
Good. Okay. All right.
Okay, I
So
just wanted to double check. Did someone just joined in?
someone did just join in.
All right,
Yes,
yeah,
I
so
did.
yes, I don't think I'll be able to put your name. Okay,
I don't think I saw my name.
who's speaking?
I'm Denise. I put that I'm Denise, and I also changed my name to Denise. That was the iPhone, I think 250.
Give me a spelling of your name, please.
D
I
is
see
in David.
Mm-hmm.
E as in excellent, N as in Nancy, ISE.
Oh. Okay. So that is all. All right, so we're ready. So I'm gonna go ahead and start it. Lameka?
Yes,
I'll
we're gonna
go ahead
pick
and
3
start.
people. Go for it. All right, Salisha.
Alicia.
Woo!
There's
So click
Alicia.
remove, Edlin, click remove so her name can be taken out. Yeah,
Okay.
yep. Salisha, congratulations. I'm gonna put a link in the chat for you to fill out so we can make sure you get your card, okay?
Yes, ma'am. Thank you.
Ellen's gonna pick 2 more. Ooh, I can't do it from here. It's my work computer.
Farah.
Okay.
Congratulations, Farah. Okay, last but not least. Stacy.
Oh my goodness.
All right, thank you guys.
Thank
We are
you.
finished. And like
Okay.
Micah mentioned, she will put the link.
Actually, I can't because I'm on my personal computer, so I don't have the link. Ellen, do you have the link that you can put in for them?
So sure, I would
It
probably
would
have to
be
go on the
in one of the emails Cindy sent us with, like, you know, instructions for presenting and all that stuff. It's a form
What?
we created. It is the same one we discussed at the meeting we had. If you can't find it, we'll have to ask for their information.
Uh-oh.
Okay, so yes, congratulations to our winners. Okay, hold on, guys. We want to make sure that we get the winners' information. So hold on 1 second, please.
You just posted it.
Okay. All right. So you guys can fill it out. Thanks, Cindy. You guys can, those of you who won, the 3 people, please fill out that form Cindy just put in the chat. And then that way we'll make sure you get your gift card. Okay. Okay. So this is the message from Cindy. She's not able to unmute and speak, so I'm gonna read it. So basically, we shared that everyone who attended the sessions will be able to get a bag of produce. And since we weren't able to meet in person, we were wondering if you guys were willing to, like, just kind of schedule a day to pick that up, because we wouldn't be meeting at the location. We would have given it to you the last day. So are you still interested in it? 2, if so, are you open to scheduling a day where you can, like, come to the office and pick it up? So Salisha says yes. Okay, that's a yes. Okay, any other yeses that you guys are willing to come and pick up the produce?
Luana, yes.
D says yes. Okay, I guess it's a yes. And okay, Farah says yes. Everyone's saying yes. All right. Okay. And Cindy, you can put in the chat. We're thinking 57 Willoughby, or would you do it in the neighborhood in East Flatbush? Let me know and I'll let them know. Our office is downtown Brooklyn, but it might be a different location. I'll just wait. You guys are gonna get the communication about it. We just wanted to see if it's something you're still interested in. We're gonna make sure we clearly communicate it. I said food is good all the time. Yes, it is. Okay, those of you who are filling out that form because you won the raffle, put done in the chat when you're done, so we'll know that you have completed that task. Okay, so Cindy, okay, we would do a location in the community. Okay, so particularly, it would be a location that you guys can come to easily, like maybe Rugby Library. That's what Cindy said. Okay, so we will be in touch with you. We have everyone who attended, because you know we have the Zoom records of your attendance. So we'll reach out to you and let you know when you can pick up the produce for attending. Okay. Do any of you have any questions for us about anything?
Personal question I need to ask you, but not.
Okay, you want to call me or you want to stay on the Zoom when everyone leaves? I could chat with
Yeah.
you.
Yes.
Okay, stay on Zoom?
Yes.
Okay, no problem. All right, so Stacy is done. And our other two winners, let us know when, okay, Celicia is done. We're just waiting for one more person. So everyone else, I'm gonna actually stop recording because we are